So before we continue, uh, let me share with you the course outline. I think I have it here.
Okay.
Now, this is paper number 11, Management Accounting. And we have several topics. I think we have 8 of them, if I'm not wrong. Let me confirm. Actually, it is 10 topics. Now, the first three topics, that is the introduction or the context to management accounting. As you can see there, the first topic is called the context of management accounting, which has some other subtopics within. So that is the theory part. That's the first theory of this class. Then topic number 2, also the theory part, is the cost terms and concepts. Also that one is features the theory part for this topic. Topic number 3 is what we call the introduction to cost estimation, as you can see there. Now, at this point or at this part, topic number 3, this is where we start to do computation part. So we shall be doing all our computation will be based on cost. So any computation that we'll be doing, it will be related to cost. So topic number 3, it is where we start to do some computation. Topic number 4 is called cost accumulation, which is divided into 3. Cost accumulation is divided into 3. We shall talk about the material cost, then we do the labor cost, then the overhead. So it is divided into this. So number 1 is the accounting for the direct material cost. That one is fine. And then number 2, I think we have it here, accounting for labor, which is they have not identified it very well. And then we have the accounting for overhead. So in this part, we shall have 3 items under this topic which you need to know. So that is topic number 4, cost accumulation. It has 3 sections. So accounting for material. Number 2, accounting for labor. And number 3, accounting for the overheads costing. Then topic number 5 is ABC. We call them the activity-based costing. Those deals with cost drivers. It deals mostly with the cost drivers. Then topic number 6 is called the product costing. So we shall talk about the process costing, job order costing, batch costing, and other form of costing. Then number 7, it's about marginal and absorption costing. Then we shall key in the element of fixed cost and variable cost inside. Then number 8, we have the CVP analysis. We call them the CVP, the cost volume analysis, or the BEP, breakpoint, the breakpoint analysis, BEP, breakpoint analysis. Also, that one we shall be dealing with the variable cost and fixed cost to determine these items here, application. So we shall use the CVP analysis or the breakpoint analysis to do the application of the marginal costing. Here you can see it here, 8.8. Now this one relates to the items that we shall do under the CVP and BEP. Then number 9 is the budget. So we shall talk about the master budget and the type of budgets. And then we shall do preparation of the cash budget and preparation of the flexible budget. Then the last topic is standard costing. We shall talk about variance analysis. So for topic number 10, we shall talk about the variance analysis. Now, topic 10 is a compulsory topic in exam. Topic number 10. Topic number 9 is also somehow compulsory. You might find it, but topic number 10 is compulsory. Topic number 8, not so much compulsory, but it is important. Also topic number 7. Topic number 6 is compulsory. Topic number 6 is compulsory in an exam. Topic number 5 also compulsory. And topic number 4, cost accumulation, also compulsory. So those are the main topics for you to understand. Are we okay?
Yes.
Now let us go to our focus today. Now our focus today, we shall introduce topic number 1. That is the context of management accounting. And then I hope maybe we finish it today. Now, without wasting any time, let us start this topic. And as I have said, it is the context, supposed to be context. Context of what? Of management accounting. Now, when we talk about management accounting, the idea that should come into your mind is things to do with the decision making. So when we talk about management accounting, just know what we aim is to make decisions. So the key thing here is about making decision. Now, but before we make any decision, we need to have some information. Now, that information that we need in order to make a decision in terms of cost is what we call the cost accounting. So even before we talk about the management accounting, we need to define what is cost accounting first. Once we define what is cost accounting, then we can define what is management accounting. Now, from our first subtopic, the definition and scope of cost and management accounting, they are saying that cost and management accounting involves the process of identifying, measuring, analyzing, interpreting, and communicating financial and non-financial information to aid managerial decision making. Now, that is what we mean by the scope. Now, when we talk about the scope of cost and management accounting, we are just talking about how to identify cost, how do we measure those costs, how do we analyze them, and how do we interpret those costs, and how do we communicate those costs. And then we have the other part, to aid in managerial decision making. Now, those are two different things. The first, we have this first definition here, from the word process up to financial and non-financial. Then we have another one here, to aid decision making. So in this statement, we have two things. Number one, we have the process of identifying, measuring, analyzing, and interpreting, and communicating financial and non-financial information. Then we have another part that says to aid in managerial decision making. So this definition has two parts. The first part is cost accounting. The second part
Excuse me for a minute.
Yes.
Can you display the notes? Ni syllabus tu bado iko hapa naona.
Iko kwa syllabus. Aya. Wait a minute.
Okay.
Just a moment.
Okay.
I think that one is fine.
Not yet.
You cannot see my Word document?
No.
I have displayed it. I think
It's not visible.
so what are you saying now?
So what are you? Just your profile.
Just my profile. Okay, let me stop
Yeah.
sharing, then I reshare.
I can now see it.
That's fine. Now, okay, I think I will
Now,
start again. You can mute. So for to avoid the, so in case you have a question, you just ask. Okay. Now, as I was saying, when you talk about the context of management accounting, even before we jump to management accounting, we need to understand what is cost accounting. And from what I have highlighted in my Word document, as you can see there, it says that cost and management accounting involves the process of identifying, measuring, analyzing, interpreting, and communicating financial and non-financial information to aid managerial decision making. Now, that statement has two items. The first item is from the process of identifying up to the non-financial information, while the second statement is from aid managerial decision making. So we have two statements. The first statement is about cost accounting, while the second statement is about management accounting. As I had said earlier, when you see the word management accounting, just know it is about decision making. When you see the word management accounting, what should come into your mind is it is there just as a tool to help us to make decisions. Now, but before we make any decision, we need some information. So we need some information that we can use so as to make those decisions. This information is what is called the cost accounting. Now, cost accounting provides information about cost to the management accountants. Then management accountants use that information to do what? To make decisions. Now, when we say that cost accounting is the process of identifying, measuring, analyzing, interpreting, and communicating financial and non-financial information, that would mean that is cost accounting. Process of identifying, measuring, analyzing, interpreting, and communicating financial and non-financial information. Then when we say to use this information about cost to make decisions or to aid in managerial decision, then we are not talking about cost accounting. We are talking about management accounting. Now let us read the next statement. While cost accounting focuses specifically on cost ascertainment and control, management accounting extends to planning, budgeting, performance, and risk management. All those items involve, it will lead us to what we call the management. Sorry, it will lead to what we call the decision making. Now, let me give you a good now definition of cost accounting. Number one, you can say that cost accounting refers to the ascertainment and control of cost. That is number one. Even we can add it here. You can say that is the first definition of cost accounting. So you can say refers, let me use a small letter, refers to what? To ascertainment. Refers to ascertainment. This is the best one, and it is not that lengthy. So it refers to the ascertainment and control of cost. That is the best definition we can use. It is not lengthy. So when we talk about cost accounting, we are talking about cost control, and we need to ascertain every cost. So refers to the process of ascertainment and control of cost. Then we have this another definition which you can also use. It is the application of accounting and costing principle. So accounting and cost principle, method and techniques in ascertainment of cost and analysis of savings or the excesses as compared with the previous experience or standard. That is correct. Now, what does it mean? When we talk about cost control, when we talk about ascertainment of cost, we are just trying to control the cost. When we talk about an analysis of savings, so when you try to save something, you are trying to control the cost. So you can substitute the word savings with the cost if you want. It is the same thing. And then it also compares, but for the part of compares, it will take us back to decision making, and therefore we should limit our definition up to savings. The rest we can remove it. So principles, method, and techniques of ascertaining cost and for cost control or the analysis of savings. Up to that point, it is fine. That definition is derived from the CIMA. That is the Chartered Institute of Management Accounting. I think we can proceed. That one is fine. Now, let us see what is management accounting, because we have already defined what is cost accounting. Now, as I had said earlier, when we talk about management accounting, we are talking about decision-making purposes. That is the main idea. Now, it is the process of identifying, accumulating, and analyzing preparation and communication of information about cost by the management to do what? Now let us remove all these items. Okay, let us leave it there. To plan, evaluate, and make. The word managerial decision must be there. The word managerial decision must be there. In short, we are using the information from cost accounting to make managerial decision. That is the definition behind it. So as part of, as much as we're talking about identifying, now identifying, we have already identified it from the cost accounting. Accumulating, so when we accumulate all the costs together and when we analyze it, now this has already been done by the cost accounting. And therefore, the main purpose of management accounting is to make decisions from what has been analyzed by the cost accountant. But it's good to include everything. So we can say that it is the process of identifying, accumulating, analyzing, preparation, and communicating of the information about cost to be used by the management to make decisions. That is the main thing, to make decision. So if they ask you in an exam, you give us the difference between, so maybe 2 marks or 4 marks, you give a difference between cost accounting and management accounting. You just say that cost accounting refers to the ascertainment of cost and control of cost. And then management accounting, you say, refers to the ascertainment of cost and control of the cost, and you add for the purpose of making managerial decision. So one is to ascertain cost, the other one is to use that cost to make a decision. I think that one is fine. That one is fine. One is to make.
Yes, it is fine.
Yeah, so you remember one is to ascertain cost, and the other one is to use the cost ascertained to make managerial decision. Now let us see cost objectives. So what is a cost objective? Now a cost objective is an activity for which a separate measurement of cost is desired. What do we desire? Maybe we desire to ascertain cost so as to make a decision on how to charge the price. So you need to know how much will I incur in terms of cost so that I can make decision about pricing. So that the pricing part is what we call the cost objective, and that is the desire. Now, So that is what we mean by cost objective. So any activity for which a separate measurement of cost is desired. Now remember, a cost unit, we shall talk about cost unit in our next chapter, but remember, a cost unit is a cost objective. So a good example of a cost unit is a cost unit is an example of a cost of a cost objective. And when we talk about cost unit, so what is a cost unit? Just to explain it very well. Now, a cost unit refers to the cost per unit. That's a very good example. So when you are measuring maybe the number of books, maybe you printed 10 books. So if you printed 10 books and you want to know the cost for one book, you divide the total cost with the number of with those 10 books. Then you shall get the cost per unit. That cost per unit is what we call the unit cost or cost per unit. And that is a good example of a cost objective. Now, however, there are some cost objectives which are not cost unit. In short, we cannot determine the cost unit. Now, that one is topic for another day. So you can find that there are other cost objective which are not cost unit. That one we shall do it later. Now, example of cost objective include product. Product, for example, a book. A book is a product. A service, for example, accounting service. So you can have service per unit. We can have department, we can have segment of the business, we can have a function or a process or activity. All those items, we can consider them as cost objectives. Now, sometimes it is impossible to trace some cost direct to cost unit. Now, we shall talk about things to do with the traceability later. Now, when we talk about traceability, but let me just negotiate. Now, traceability is when we can trace the cost back to the product. Now, some cost cannot be traced back to the product. Some cost can be traced back. Now, for direct material or from the direct cost, when we talk about direct cost, these are costs which can be traced back to the product. For example, kama unatengeneza meza, if you are building a meza, what are the items to be used to make a meza? What do you think are some of the items we use to build a meza or to make a meza or a table?
Timber.
Timber is one of them.
Nails. Nails.
And maybe some glue, Savio.
Yeah.
Now, when we are making this timber, the main product is the timber, Savio. So the main product is the timber, and therefore we can say that the direct cost of that meza is the timber. We can easily say the cost of the timber. So that is a good example of direct cost. So direct cost for making a meza is the timber, and that is the cost which can be traced to the product. Then we have glue. Now glue, tunaweza kuwa tumenunua glue maybe chupa moja, but hiyo chupa moja inaweza kuwa imetengeneza meza kama a lot of hata meza maybe kama 100. Now can we say the amount of glue in terms of cost used in that meza? Kama tulinunua chupa moja na yatengeneza maybe meza 100 or meza mingi, can we say the cost of that glue in that meza? Yes.
Maybe in terms of per bottle used.
Now, for example, if we used one bottle to make 100 meza, can you say the cost of the glue in one meza? Na tumetumia hiyo glue, hiyo chupa moja kutengeneza meza 100. It is very hard to say.
Yeah.
Sio kweli?
Yeah.
Now, in that case, that cost is what we call the indirect cost. Sawa. So we have direct cost, but we shall do it in topic 2. Naguzia tu because tumeongea hapo. So we have direct cost. Direct costs are costs which can be traced back to the product. So direct costs are costs which can be traced back to the product. Then indirect costs are those costs which cannot be traced back to the product. Sawa sawa.
Yes.
That's what we are saying here. Let's go back to our Word document. Sometimes it is impossible to trace some cost. Sometimes it is impossible to trace some cost direct to the cost. Those costs that are impossible to trace, we call them the indirect cost. Sawa sawa.
Cost.
Yes, and those that
Yes.
we can easily trace to the product is the direct cost. Now let's see some of the objectives. Now objective is the same as purpose. So if they ask you state the purpose or the uses, so the purpose or the uses or the objective, then it's the same thing. This one you can say stroke purpose. You can say so stroke. You can talk about uses. Now, the main objective or the main use of cost accounting or management accounting is to ascertain cost from the definition. Is that correct? Number one is to ascertain cost. So we ascertain cost for what purpose? For the purpose of making decision. But for now, we just set it to ascertain cost. That one is fine. So one of the purpose of management accounting or cost accounting is to ascertain cost. Number two, I think number two we can go to with number four, to provide information to aid in cost. Number four, can you say number four? In cost.
Yeah. Yes.
To aid in cost control. Then you go to number three, to facilitate what? Decision making. Okay, so we have said number one, we can go with the definition. Number one, we can talk about to ascertain cost. That one is the main objective of cost accounting. Is that correct? Then number two, we can go with the fourth one, to aid in cost control from our definition still. So remember our definition had ascertainment of cost and control of cost. So number one and number four will be the first two objectives. Then number three, go to the decision making. We go to the decision making. We go to the decision making. That one correct? And then we can add the rest for planning purposes, also for motivation purposes, and to promote cost consciousness at all levels of management. Now, it is the work of management accounting and cost accounting to make sure that the costs are spread equally to all the management, so as to encourage or to promote motivation and fairness just within the department. So that is number five, to provide motivation and promote cost consciousness at all levels of the management hierarchy. That one is for the purpose of fairness, to make sure that each department is given a share fare of cost. And then number six, provide formal means of gathering detailed information. That one is correct. That one is from cost accounting. So it is the purpose, it is the objective of the cost accounting to make sure that detailed, relevant information is supposed to be detailed, relevant. Let us add the word relevant. Relevant information it can be gathered for the purpose of analyzing cost and for the purpose of making decision. So to provide formal means for gathering detailed relevant information. So it must be relevant information so as it can be used for the purpose of making decisions. Now, these are not, we are not limited to this objective. So you can find some other objectives in any other book. So, but for now, we can stick with the 6 of them. So to ascertain cost, and you can also split number 1, and also to facilitate pricing. That one is fine. You can put it separately, but me nimeweka the same. So in case you don't have a lot of points in an exam, you can try and separate. So to ascertain cost and facilitate pricing, to provide information to assist in planning, and then to provide information to facilitate decision making, then to provide information to aid in cost control, also to provide all those. I think they are not hard. Then let's go to the users of the management accounting information. So who are the users? Number 1 is the top management. So why does top management use this information? Use this information. So number 1, the top management use this information to make decisions. That is number 1. You need to underline the word decision making, such as which decision. For example, you can decide to expand a business, to discontinue some business, to determine price, to invest in long-term businesses. So all that combined is what the users of this information will use to make the decision. So the top management. So top management kama CEOs, kama nani mwingine, managers, all those can be categorized as top management. So the CEO, the CFO, the managers, and so on. So those are the top management. So they use this management accounting information to make strategic or managerial decision, such as determining the price to be charged from a product, to make a major investment or long-term investment for the purpose of expanding business. They can also use this information for the purpose of discontinuing a particular product in the market if it is making losses. All those and others. Number 2, let us go to, so the first user is the top management. Number 2, the second user is the middle management. So who are the middle management? Supervisors or supervisors are in other level.
Middle.
Or those are like accountant, finance director. Who are the middle management? So for example, top management,
supervisors.
Supervisors. Now, for example, if you go to when we talk about management accounting, we are talking about mostly we are talking about manufacturing firms. Sawa. Now, manufacturing firms, you find that they have supervisors, and then apart from after supervisors, the people who are above the supervisors, for example, they are the procurement officer, the accounting officer, the finance officer. Then after that, those who follow those people above, they are the managers. Then after managers, we have maybe the directors, the directors of the company, executive and non-executive. Now for top management, we can talk about the executive. That is executive and non-executive directors. Then for middle, we can talk about the procurement officers, finance officers, human resource officer. So why do they need this information? Now, middle management uses this management account information to control and improve departmental performance, because it helps them to prepare a budget. So who prepares a budget? Accountants. Is that correct?
Yes.
Then compares actual results with the targets, investigate any variance if there will be a variance, and then manage the resources effectively. Now that one goes hand in hand with the finance officer or the accounting officer, so the middle management. Now, when we talk about cost control, I want you to remember this. When we control cost by comparing what we have incurred and what we had estimated. So maybe we had estimated we shall incur 10,000, but we actually incurred 12,000. Now that means that there is some variance between what we estimated and what we actually incurred. So that variance must be investigated, and that's why we are talking about compare the actual results with the target. The target is what we had estimated. Then if there is any variance, so the variance can either be favorable or adverse. If it is favorable, then we continue. If it is adverse, then we need to do what? To correct. So all those items is done in the middle management. Then next we have the managers, supervisors and operational managers. Supervisors and operational managers. Now they use the management accounting information to run day-to-day activities. For example, monitoring the labor, checking the material usage. Material usage is the amount of material we need to do to do production on a daily routine. Also talk about those normal things that business do on a day-to-day operation, payment of wages and the salaries, controlling wastage in the machines, and so on. So all those is done by the supervisor. So the supervisor is there to supervise everything, to make sure that the product are well produced or manufactured, to make sure that there are no errors, vitu kama hizo. Then number 4, we have the finance and management accounting. So tumerudi tena huko juu. These are also users of this information. Now, when you see the word finance and management accounting team, just know they use this information to make budgets. So those budgets will aid to investigate any variance, and it will also assist in making decisions on what to purchase and not to purchase. That one is fine. Also, when you see the word finance and management accounting, just know that they need this information about cost to do what? To write and prepare reports. So you need to remember that one. So when you see the word finance and management accounting, number 1, you need to know they use the cost information to do what? To prepare internal reports. Number 2, they use this information about cost to make budgets. And number 3, they use that budget to do what? So they compare the budget with what they incurred for the purpose of what? For the purpose of analyzing variance. Now, if the variance is favorable, then the process continues. So it's a continuous process. Now, if there is an advanced form of variance, then they need to correct it before they progress. Then you have the production and operation department. Hiyo ni kama pale juu tumeshaongelea. Don't need to repeat it again. That one is fine. So for production and operation management, so that one is to ensure the efficiency of work in the business. So that one is to ensure that there is efficiency of work in the business. So to avoid time wastage by the labor or by the people working, to avoid wastage, to make sure that materials are well used. Then you have sales and marketing department. Sales and marketing department. Now they use this information to do what? To predict the amount of sales they need to make so that the sales can absorb the cost. So sales and marketing department uses the management information system to maximize profitable sales because it identifies product and customer profitability, support pricing, and discount decision. So remember, when you give clients discount, that discount is a cost. So remember, discount is a cost to the business. So discount must be featured in. Also, it helps to evaluate what we call the promotion, whether the promotion are adding values. Human resource. So when you see the word human resource, just know it's about payment of workers. So when you see the word human resource department, just know they're talking about payment. Now they use the management information to manage labor related costs. For example, salaries and wages. So those are the labor related costs. And also performance. So human resource department can also do what? Evaluate performance of people in terms of cost. So in terms of cost, for example, we have the overtime cost and other type of cost. So it is the work of human resource department to do such kind of work. Then procurement and departmental stores. Now when we talk about procurement, you just remember you're talking about purchasing of products, goods and services. We are talking about restocking our stock. We are talking about controlling the stock and then reducing the losses from overstocking or understocking. So the procurement officers uses the management accounting information to do number one, to control purchasing and inventory cost, because it supports supplier comparison, reorder decisions, stock control, reduces losses. Now, it is not necessary you write it the way it is. You can say that the management accounting information uses this information. Sorry, the procurement officer uses the management accounting information purposely to control the stock in the store. So to control the stock in the store, to control cost in the store, and also to make decision on when to do what, to reorder a product, and maybe to make decision on how to avoid overstocking and understocking, and also to avoid wastage. That one is fine. So those are some of the users of the management accounting information. Remember, these users are different from financial accounting users. So you don't confuse with the users in financial accounting. So cost accounting as a subset of management accounting. That one we already talked about it. So cost accounting provides the information about the cost to the management accountant. Then management accountant use that information to make what? Decision. So cost accounting is a subset of management accounting because it focuses specifically on collecting, classifying, and analyzing and controlling cost information, so that the managers can plan, budget, set prices. All this, you can see all this item. The managers can set prices, blah blah blah. Up to this point, all those deals with what? Decision making. All this you can just say decision making, rather than talking about all those items. Now, but when we talk about cost accounting as a subset of management accounting, just know that cost accounting is there to ascertain cost and transfer that information about cost to the management accountant, so as to do what? To facilitate the managerial decisions. Is that one okay up to that point?
Yes.
So let us see the comparison between financial accounting and cost accounting. I will share this PDF later. So cost accounting and management. So what are some of the similarities? Now, similarities, number one, they are both concerned with the recording of information about cost. So that is number one. They are both concerned with the recording of information about cost. So financial accountants also record the information about cost. Same to management accountant or cost accountant. Both must record the information about cost. Number two, both are involved in doing what? In presentation of the financial and cost data. We can put this one into two. Let us make it this to be. So we can say they are concerned with the recording of information about costs. That one is fine. So both are concerned with the recording of information about costs. Number two, both are concerned with the representation of the financial and cost data. Number three, both apply same principles of double entry when recording transaction. So you need to both uses the double entry concept. For every debit, there must be a credit. For every debit, there must be a credit, Sivyo?
A credit.
Yeah, yes. So they both uses what? Double entry system.
Double entry.
Now they use same books of account or documents. So they use same books of account or documents. Sawa, i.e. the books of original entry. So they all use those books. That one is fine. Let us see the differences, some of the differences between financial accounting and cost accounting. So this is cost accounting stroke. Just put stroke management accounting. So number one, for financial accounting, the report are submitted to shareholders. So for external purposes. So this one means the report is used for, so any report that is made, it is used for external purpose. So it is used for external purposes or for external report or the shareholders. So external purposes. Now for the other one, for management accounting, it is used to the management. The report is submitted to the management internally. So internally. Number two, preparation of the financial accounting is a statutory requirement. So that's a requirement by the accounting standards to do what? To prepare these reports. So it's a requirement. So financial accounting must prepare the financial report. It's a requirement for them to prepare every year at the end of the financial year. Now, for cost accounting, it is not a requirement. Preparation of the management accounting is a voluntary exercise. It is not a requirement. Number three, financial accounting statements are periodic. They are periodic. For example, periodic for 1 year or for 3 months, for half an year. Management accounting reports are continuous. So they are continuous. They are not periodic. So for the management accounting, they are continuous. For financial accounting, they are periodic. Then for financial accounting, the statements are prepared as per international accounting standards. Management accounting reports are prepared as per the Chartered Institute of Management Accountants. So for financial accounting, we need to follow the accounting standard, the IAS and IFRS. So we need to follow the IFRS and IAS to prepare the statement. For management accounting, you can just say the statement are there. You can say there are no guidelines. Let's just say there are no guidelines on how to prepare what? Financial report. There are no guidelines. This is supposed to be guidelines. But for financial accounting, We need to follow what? The international accounting standards. Number 5, financial statements are subject to audit. Management accounting statements are not subject to auditing. That one is fine. That one is well explained. That one is just normal. So financial statement and financial accounting, they must be audited. But for the other one, for management accounting, it is not a requirement. Number 6, financial accounting is conventional, meaning it does not change. It is the same throughout. Management accounting is dynamic. It keeps changing from one organization to another. So when you see the format of the financial reports of a company, so the reports are the same. If it is the section of the company what structure, the part of the audit report, it is the same from one company to another. But for management accounting, their financial statement or their reports are different from one entity to another. Their structure is different, so it is dynamic, or it keeps changing from one organization to another. Number 7, financial accounting emphasizes on recording of the financial transaction. So it emphasizes on recording of the transaction. On the other hand, the management accounting emphasizes on what? Controlling of cost. So financial accounting au kazi yao ni kurecord. So kama mtu alikuja kanunua kitu, they just record. That is their final what? Part. But for management accounting, they need to do what? To go through all those transactions and do what? And do what we call the cost control, so that to avoid overspending or such things. Number 8, financial accounting uses historical information, while management accounting uses future cost. So that is another thing you need to know. So number 8, management accounting uses historical or past information to analyze cost. 3, they uses historical information to prepare statements. So financial accounting uses the historical or past cost to prepare financial statement, while management accounting use predicted or predetermined or estimated or budgeted cost to do what? To control cost. Number 9, reports are used for this one is financial accounting for internal and external. Supposed to be for internal and external purposes. Number 9, financial accounting. So reports are used for internal and external purpose. Then cost accounting reports are used for internal only. Internal purpose. Number 10, the last one, the objective of financial accounting. Hapa ni kama nimefanya makosa. This one is supposed to be on the other side, but we mixed up. This one is supposed to be on this side, and then this one ikuje the other side. That one is fine. So the objective of financial accounting is to satisfy stewardship function of the management. What does it mean? Now, this is to provide the users of this information with information so that they can make the decision. So stewardship is to means what? What's the meaning of the word stewardship? Stewardship. Kama protect or what? Stewardship.
I think kitu kama responsible care.
Yes, that one is fine. Now, to satisfy stewardship function of management. Now, what does it mean? It means to do what? To account for the use of resources. So financial account is there to make sure that the resources are well utilized. So it is their responsibility to account for the use of the resources to the users of what? Of this information. Now, on the other side, for management accounting, there is nothing like stewardship. For them, the objective is provide information to aid in what? Planning. So the objective is provide information about cost. So let us add here about cost to aid in decision making and for control purposes. That one fine?
Yes.
Now, objective so advantage to cost accounting. So hiyo is a repetition. Iko huko juu. So it's also so objective also means advantages. Hiyo iko sawa. So cost control, number 1, number 2, decision making, number 3, for planning purposes, number 4, cost ascertainment, number 3, disclosure of waste, number 6, to measure efficiency, and then mwisho to set prices. So iko sawa?
Yes.
Now, what are the relationship between management accounting and other managers? So relationship between management accounting and other managers. For example, other managers, for example, number 1 wanasema management accountant work closely with the production managers by providing what? Unit cost report, efficiency and wastage analysis, budget comparison, etc. So iko sawa? So the relationship between production manager and management accountant is do what? Providing of information about cost, to provide information about efficiency and wastage analysis, and also to provide information that allows comparison, especially when it comes to a budget. Number 2, management accounting and sales. So management accounting and sales managers. Now, management accountant supports sales and marketing managers by supplying product and customer profitability report, pricing and discount analysis, sales performance summaries, so that they can focus on profitable market and make better pricing decision. So iko sawa? So the management accountant will provide information to the sales managers about the cost of supplying product to the market, the pricing of that product in the market, any discount, so that the sales manager can make better decision about pricing. That one is fine. Then management accountant and finance manager or the treasury. So the management accountant will provide cash budgets, forecast, working capital reports, and any other form of report to the treasury, so as to do what? To manage what? Funding needs, to manage the liquidity of the business, and to avoid what? Cash shortages. Then management accountant and human resource managers. That one is, so the management accountants will provide information about costs related to labor to the human resource management, so that they can estimate what? Payments, payment of salaries, staffing budgets, or things to do with payroll control, or to make sure that there's a fairness when it comes to the incentive schemes for the business. Then you have the management accountant and the procurement managers. That one is so the management accountant provide information about cost the procurement officers, so that they can do what? They can control stock, or they can do what? They can control wastage of stock in the warehouse. Let us see the limitation of cost accounting or management accounting. Number 1, cost accounting involves inherent element of judgment. Now, inherent element of judgment means my judgment might be different from the judgment of another person. So I can make a decision that this cost is not direct, but indirect. Another person can say that this cost is indirect and not direct. In that case, then we have the inherent element of judgment. Number 2, cost accounting normally provide information for making optimal decision in specific circumstances. So this one is limited to specific circumstances. However, there is no best decision in all circumstances. So that's a limitation. So there is no best decision in all circumstances. So it only provides decision for specific circumstances. Number 3, it involves massive paperwork. That one is a limitation. it has a lot of paperwork. And then another point, it is very expensive to maintain the cost accounting system. So cost accounting system are very expensive, and then that one is a limitation. So they are very expensive to maintain. So it's expensive to maintain costing accounting department in an organization. So including the system. And then cost accounting only captures the quantitative data. So it cannot analyze qualitative. That's a limitation. So we are just dealing with the cost which is monetary. What about non-monetary items? So how do we capture them? So it misses the aspect of capturing the non-monetary item or qualitative data. Now that one is, so we have 5 of them. Then you have the management accounting information system. Now this management accounting information system refers to the combination of procedures and records designed to provide information required by the management in order to conduct the operation of the organization. That one is fine. So when we talk about the management accounting system, this refers to combination of set procedures. It's supposed to be set procedures, so it must be a set procedures and records designed to do what? To provide information required by the management in order to do what? To make decisions. So remember, at the end of the day, we are just talking about to make decision. What are the conditions of an effective accounting system? Number 1, condition of effective management accounting system. Number 1, it must meet the needs of the managers. Number 2, it must be simple, economical, and practical to use. It's supposed to be not something complex. It must be very economical. Economical means the cost should be less than the benefit, or the benefit must be more than the cost. And then it must be simple and not complex. So hizo tatu unaziweka kando kando. You can say the system should be simple. Another statement, it should be economical, and another statement, it should be practical to use. Now it must be supported by all parties. So every department must support that system, because if one department doesn't want that system, it means that it is not suitable for all the department. So the system must be supported, or it must be used by all parties in the business. And then the system must lead to what? Cooperation between the managers and employees. So there must be cooperation. So the system must allow cooperation between the managers and the employees. And then another condition for an effective accounting system is the system must be adequate. There must be an adequate payroll procedures. That's number 5. There must be an adequate payroll procedure. How do we pay our employees? So the system must capture that. That one is very important. And then the cost accounting department must be established within the system. So the cost accounting department, so the system must accommodate all the departments, including the cost accounting department. So the accounting software must accommodate all the departments, including the cost accounting department. Now every cost item should have its own record. That is another idea. So for the purpose of recording and for the purpose of reference, each cost item should have its own record. So the system must allow that each cost system, for example, if it is direct cost must have the entries for the direct cost. If it is indirect cost, there must be also an entry for indirect cost, in that order. The system should be flexible. That one is fine. Flexible means it can be adjusted for changes. So remember the environment is dynamic, and therefore the system must also be dynamic. So it must allow what changes in the when we have different environment. Next, there must be proper system of stores and inventory control. That one is fine. That one you know. So a good system must have a good system for doing what? For storing goods, and also for controlling, or for inventory control. And then there must be a sound plan for correction of indirect costs. So remember we said indirect costs, those are costs which we cannot trace it to the product, and therefore a good system should capture how do we correct indirect cost and how do we absorb this cost. So for absorption, of course, we shall do it in another topic, but how do we absorb them? When we say absorb, it means how do we transfer this cost fairly to all the departments. So each department must incur all the department incurs the indirect cost, and therefore we need to transfer this cost or to absorb this cost fairly to all the department. So we need to come up with the system should have what a sound plan for collecting all the indirect costs, and not forgetting how to transfer this cost fairly to the other department. So how do we absorb them? So it must also capture the absorption of those costs to the other department. So what are the difficulties involved in storing the system? In storing a management accounting system. So management accounting system. So what do you think are the limitations? Number one, lack of support from the top management. So if the management does not support installation of this system, then that becomes a problem. So lack of support from the top management. Number two, resistance from the employee. So if the employees are resistant to changes, so for example, they want to install a new system, but the employees are resistant to the changes of that system the system, then that one also becomes a difficult problem in installing either a new system or maybe upgrading a system. And then installation cost is very expensive, and then lack of expertise. So you find that someone is installing management accounting system, and that person does not have what knowledge of the management accounting. Now that person can be an IT expert. So that person is in the field of IT, but does not have knowledge of management accounting, and therefore that's a limitation, and therefore there is lack of adequate expertise to install and run the system. So and therefore that one calls for people to do what? Maybe to study accounting, and at the same time maybe study some IT, so as to do what? To bridge that gap. So there is lack of adequate expertise to install and run the system. That one's another disadvantage. And then forms or records might be inappropriate. So forms and records might be inappropriate, i.e. may contain the adequate information, may not may not contain the adequate information necessary. That's one limitation. So all the information that you find in the reports might be not inadequate. So the system has generated a report. But that report does not capture everything. So it can be may not capture or may capture data which is inappropriate. So for example, if you are not an expert, you might use information which is not relevant for making decision. So that one is another limitation. So, and then it requires what? That is fine. It requires, I wanted to say that one, but that one is captured in information number 3. So it requires expertise to run and maintain the system. That one is a repetition. Now, let us see the steps. Now, for steps, that one you can read on your own. I will send the notes. So for this one, you can read on your own. I wanted to talk about the last part. Oh, the last part is over. There's no any other part. So, can you go and read steps in installing cost accounting system? So that when we meet time, we shall start with the topic 2. Topic 2 is about what? Cost and cost control.
Okay.
Not cost and cost control, rather costing terms. Cost and costing terms and the concepts. So I'm going to share the notes. So that one marks the end of this class, unless you have a question.
No, I don't have.
So we shall communicate on our next class.
Okay.